Okay, well, welcome everyone. First off, I want to check to make sure the sound is adequate. Everyone can hear me well. So if I could just get a single Y, and also if you can see a presentation. This is, we're not doing the same presentation, but what I thought would be interesting is just to go through to just remind everyone what we covered Thursday night. So I'm going to flip through these slides real quick, and then we're going to get into our second half, which is indicators and how we put together a trading plan. So first off, what we did cover on Thursday was seasonal supply and demand functions. First off, there are either because of events, because of holidays, because of weather, due to changes in consumers' needs, and of course supplies and inventories. A disaster event like we've just experienced with Sandy hitting the Atlantic Northeast coast is obviously going to increase the need for, in a lot of areas, rebuilding. I would imagine being through tornadoes and hurricanes from living down here in Florida on and off for the last 20 years or so, I could tell you this: chainsaws are a very important element to get through the trees. So chainsaw sharpening tools, believe it or not, just those little things, generators, power generators. But, one thing that we will know that you do go through a remodeling phase when you have like the great floods that we had in Chicago, where our home was just inundated, flooded out not once but 3 times. It was the great flood of the Midwest that would never, the 100-year flood that would never happen again. It happened like 3 years in a row. So, in fact, these are some of the topics, and I didn't put down any type of weather emergency, but we should have. But energy demands change, technology releases, upgrades, etc. And we have political changes, and we have one coming up next week. Stocks, looking at the stock market, typically you see a market downdraft going into the 3rd week of October, and then you see a slight recovery at the beginning of the month of November. Now, November typically is not the average best month in the S&Ps, and I wanted to discuss that today because the market has not really adhered. The S&P has not really adhered succinctly to its seasonal tendency. It's out of gear with its seasonal tendency this year, mainly because of certain forces in the political year, and also because of the fact that we've just seen changes in the global economy. This year, in fact, even last night, the Japanese government, they are now, so you have, they are involved in quantitative easing measures. So you have the European Central Bank, you have a recession globally. China's economy contracted to a degree. We would all love to be at where they're at, but in their economy, they have seen some contraction. So the bottom line is this: that my observation is that a market that is in gear with its seasonal analysis or seasonal tendency, that it's in gear or in sync with, remains in sync in the near term. Near term to me could be anywhere from 30 to 90 days out. I can't forecast, and I don't know any economist in my 30 some odd years that has been able to accurately forecast what's going to happen. And I mean, we're talking from Paul Volcker days to Alan Greenspan to even Ben Bernanke. Who can forecast what is going to happen a year from now? It's just virtually impossible. But in the meantime, if we take a look at the average seasonal tendency of price action, and how we take a seasonal chart is we take instead of actual prices, we take a ratio percentage change from day to day, week to week, over X amount of period of time. The chart that you're looking at is the SPX, which is the cash S&P 500, and this chart goes back from the very first day it started to trade. So this is the life of history tendency. Typically, what I like to do is take a life of history tendency and compare it to a more narrow time frame, like the last, say, 7 years. And if you look at the stock market in the last 7 years, we've had actually a period of sustained decline, and then we've had a period of sustained growth. I mean, for the bottom of 2009 until last month's high, for example, was almost a straight up time frame, and then from 2007 to 2009 was almost a straight decline. So if you take a look at what we'd like to do is compare recent history to overall history, see if the market is still in sync or if it lines up with its seasonal tendencies. And as you can see, this particular chart does actually reflect a more recent time frame of the market. We could do, and one thing we did not discuss the other day is in seasonal analysis, I guess you could take a weighted moving average and give more preference to more seasonal tendencies to more recent data. But what I've just discussed, and this is something that we do, and the Commodity Traders Almanac, if you take a look at the Commodity Traders Almanac, which I'm proud to be a co-author of, if you take a look at the back of the book, you'll see different markets. For example, we took 5 years and compared to 20. We wanted to see what was the last 5-year pattern as compared to the overall 25-year pattern. Does the seasonal peak, does it shift off the grid, deviation that changes in the marketplace? And for the most part, you'll types of changes in some markets. You might see the seasonal trend in more recent years come a little bit early, and in some markets a little bit later. In October, many of you have probably been listening to the news, and now you've probably heard that October is the year end. It's a fiscal year end. At the end of October, it marks the fiscal year end for a lot of funds, a lot of countries, companies, for example, close out their books for the year end at the end of October. And so that's why it's really important to get in mutual funds, of course, net asset value mark to market to find out what they're in and what their performance is. They need to have the exchanges open by tomorrow so that at the end of the month, and the end of fiscal year, more importantly as well, these things can be marked to the market. And that's possibly why we see market liquidations in October as people that are, if you think about it, if you're going to take a profitable trade, why do it right now? But you could certainly take a losing trade and take the tax credit on a losing trade. So there's a lot of different stocks and sectors. Take a look at markets that may have gotten beaten up in the last quarter, and I mean really beaten up. I'm talking about markets that and stocks that have gotten into depressed levels. Look at a Hewlett-Packard, a Dell, in that sector, the technology sector. Look at the semiconductors, absolutely gotten beaten up to no degree, and it might explain that perhaps that selling was more tax-related and more manipulating than it is just at the end of that era of that technology field. After all, people still use PCs, and I bring this up because people think that because of tablets, the mini iPads, et cetera, that people will not be using PCs anymore, and I don't think that's the case. But in any event, this sector and that space has gotten absolutely berated. So the question begets, if the market does rally, and if the situation is that we are seeing markets being liquidated because of tax loss selling reasons, because of fiscal year end, perhaps that's one of the events that is a catalyst that causes market downturns in October. This year's not really that much different. So going through what we discussed last Thursday night together was what some of the seasonal events are. Again, the supply and demand, there are certain supply and demand functions. We talked right here in bullet point number 4, financial transactions, year-end, quarterly end, year-end, fiscal year-end, and that's what we're coming up to right now. So there are things that will change, because at the end of October, and that's what I said to you last week, that this coming week, albeit no one really thought that this hurricane was going to cause a historic shutdown, the storm of our lifetime, as they're calling it. The storm of our lifetime that's caused the New York Stock Exchange and the markets to close, unprecedented. Even in the crash of 1987, which an interesting read, by the way, was written by Leo Melamed, and in his book titled Escape to the Futures. It's a great read on how Leo Melamed, as chairman of the Chicago Mercantile Exchange, in the crisis of the fall in 1987 of the great crash, how Continental Bank almost didn't pay their, and I can't remember which bank it was, investment bank, did not pay their margin call on time. The CME almost did not open, but Continental Bank's head chair authorized payment, and the CME was able to remain open during the crash of 1987. Wall Street blamed the Chicago Mercantile Exchange for the crash, and of course the Chicago Mercantile Exchange says, hey, it wasn't our fault. You guys were arbitraging, hedging, using futures, and you couldn't pay your own debts. So interesting read. The point that I'm trying to get is that even in the crash of 87, the market still remained open. So a weather event of this magnitude that's caused the New York Stock Exchange and the Chicago Mercantile Exchange and other exchanges to close down early is just unprecedented. So we live through these times, and we try to deal with it together. I've never experienced this in my lifetime, and folks, I've been doing this since I was 16. I've been a runner at the Chicago Mercantile Exchange. I worked for George Lane in 1980. And so I've seen a lot in my days, and every year we go by, we see something new, and that's a fact, and we are experiencing this together as a community. But in any event, what we try to do is to understand some of these functions of supply and demand needs. And supply and demand, it's very simple. I don't need this stock, and I'm going to sell the stock to take it's a downer, and I'm going to take this stock as a loss. So if I'm long the stock, I'm going to sell this stock and take the tax credit. So that might help you to explain why some stocks go down and then all of a sudden miraculously see a recovery. So I think we need to examine if a company is truly their business model has failed, truly if they're going out of business, truly if competition, we have to examine each individual stock and see what sector is it in and what is the industry like. So taking a look at an individual company requires you to take a look at the sector it's in and the industry in which it's in, and also look at the overall, not just micro, but also macro economic look. Now, another item that we talked about was a seasonal event that takes place. We talked about the January effect where small cap stocks outperform large cap. And it's interesting that we are going to be talking about this because I've just harped on a couple stocks that have gotten their just absolutely berated on valuation. You look at the semiconductor space, and it's just absolutely been decimated. You take a look at your Hewlett and your Dell and your computer makers, absolutely decimated. So just remember that when we get back to this point. Also, the January effect, as you can see, this was as last week when we did our webinar Thursday night. This is what we call a spread chart, or some people might call it a pairs trade. Some other might call it comparative analysis or relative strength charts. In commodities, we're just simple people. We call it a spread chart. We're comparing the one contract, and in this case, I used the S&P ETF, the IWM, which is priced off of the Russell 2000, versus the SPDR, the cash S&P index, which we have small cap Russell 2000 compared to S&P 500 large cap. And then as you can see, in the month of October, if you take a look at the market moves down, then it pulls back, and then towards the third week, the market makes a reversal. It's very similar to the third week that this market makes a reversal from a seasonal tendency, but we're not seeing it in the stock market. We're seeing that in the spread chart itself. So that's leading us to believe that typically the chart down below is a spread chart on the Russell or the January effect, or the spread chart IWM S&P. And as you can see clearly, it typically does bottom out on average through history around the middle of the month. So this was a little bit early. It rallied, it pulled back, and as you can see, it's had a nice little price breakout from, say, its July lows or July closing value, this little trough that we've built in. So we should see over time going into January, the small caps outperform the large cap brethren sector. And what that tells us is that money does come into the market and works towards year end. People start to put money to work. Maybe it's the beginning of the new fiscal year for some. Perhaps money wants to get pension funds, start to look at opportunities. Perhaps it's also small cap stocks in certain sectors that have been beaten up through the year. People start dabbling in some of these lower priced, lower cap stocks and look for a move towards year end. So the fact that you might see tax-related selling going on in the market after October passes, you typically see the market perform or see the small cap outperform the large cap. So one of the topics that we talked about, and we also went through in our planning and scanning yesterday, for those that were able to be with us, was looking at the semi space, the semiconductors, and we're going to talk about that in just a few moments and how we could look at it. We also talked about crude oil and how crude oil typically, it's not the conspiracy theorists that say crude oil went down because of the election, but crude oil typically sees weakness in October. And it might help consumers to see gas prices finally on national average under $4, with the refinery outages in the Northeast, which apparently equate to just under 7% of our domestic production. We might see support coming into crude oil as we need to refine quickly to replace either lost or decline in production. So we'll see if there are refineries throughout the Midwest, as well as refineries into the southeast and section of the country to see if they make up for the loss in production that's occurring in the northeast. But be that as it may, you can buy all the crude oil you want, but if you don't have a refinery to process it, you're not going to buy any more crude oil. There won't be any demand for crude oil because where are you going to store it? So we want to watch the relationship on both the crude oil and this one, natural gas, which typically does the opposite. So with natural gas, we want to also keep our eye on this weather event to see if it's going to have a adverse effect on the seasonality of these trends. These are the events that can cause seasonal moves not to occur. Now, last week we did talk about, on Thursday night, the semiconductor sector. And we talked about the semiconductor sector typically bottoms out towards the end of October, and it has a strong move going into mid-February. Now, that is not a short-term trade. Let's look at this. We're talking November, so there's almost a little more than 30 days. You got December, 60, 90, 120 days out. You have a strong trend to the upside in the semiconductor space. So that doesn't mean a market's going to just immediately recover. We typically see markets go through phases as people are still not sure whether they should be buying or selling. So you go through that mixed choppiness in the beginning phases of a bull trend. And then all of a sudden the market starts to break out and people start to accumulate positions. As that occurs, we should also, as we're going to discuss today, see if there is volume, more participation associated with that sector. So if seasonally we do see a bottom in this space, and if this sector is going to go from a transitional bear trend to bull trend, it's going to struggle between the bulls and the bears. You're going to start to see volume accumulation pick up in the early stages of a bull market. This is technical analysis theory as written way back in, if you ever get a book called Edwards and McGee, another great, one of the first and foremost books that I ever read on technical analysis. And in fact, when you look at the beginning phases of a bull market, the psychology is that you still have the bears clinging on to the stock's no good. You have the bulls claiming that, you know what, it's time for a buy. So you get that struggle where the market, advances are met with maybe sharp pullbacks, but you should see consistently higher lows associated, or what we call maybe a rounding bottom or some type of a bottoming pattern. The inverse hammer and the doji formation that was formed on a weekly basis certainly shares with us that this decline in this sector is starting to lose its bearish momentum. So then we're going to start to see bullish patterns exist in the coming weeks. So we want to keep our eye on the semiconductor space, and we want to conclude that by Friday was the semiconductor space picking up interest in buying. And I'm going to switch over here to my TradeStation stock selection, because I'm just going to cut to the chase for all of us, because I know we don't have a lot of time, and I know we all are trying to look at some of the markets as quickly as possible. But one thing that I just want to share with you, and we're going to start from top to bottom. This is kind of rehashing yesterday's session together in planning and scanning. But friends, I think it's very important. Some of you may not have been here, or maybe perhaps it escaped our attention due to making sure our positions from selfish reasons were at least giving it a shot of adjusting if you had any futures positions on. In any event, if we take a look at this, and we're going to start from top to bottom, I'm going to explain what this column is all about. A trend status specifically just tells me that a stock on a daily basis, and I'm going to change, I was obviously fudging around with my charts. So let's take a look at Amazon, because it's in the top of the retail. You notice that I listed all the sectors and then the top names in that sector, and we've also have labeled the ETF that represents that sector. So XRT in the retail space, if you notice here, we have an uptrend is determined trend status, because we did see on Friday Amazon popped into a daily buy signal. Now, for those who do not have my TradeStation indicators, no worries. that daily buy signal is a PPS buy signal. PPS stands for Persons Pivot Study. PPS is a momentum indicator. We have that on our daily trading room here, which we use our Genesis #1. And you will see us if you spend time with us this week, and we're going to, good news, extend this into next week because of the emergency situation in the country. So if you wanted to spend time with us and trade with us and see how we utilize this information together, we're extending this into next week. All right, so now let's say, for example, you have Thinkorswim, and you tab down to John Persons Indicators under Studies, and you'll see Persons Pivots, which is one indicator, and then you'll see PPS, Persons Pivot Study. And this is the same indicator. It's a momentum buy and sell indicator, all right? Basically, this column, all it describes is that the market has been trend status. It's either in a buy signal, or if it says downtrend, it's been, and let's take a look at JCPenney, for example. Downtrend gives me an immediate identification that it's been in a daily sell mode. So if you take a quick look just by color code mapping, if you understand what a buy signal is and a sell signal, I think most of you may understand. Sell means market might be going down or it's under negative pressure. A buy signal means the market's under a bullish mode or buying pressure, all right? So if we take a look of this column right here, it says current bar reversal. So the current bar, because the markets were closed yesterday, reflects Friday's action. So as of Friday's close, when we take a look at the retail sector, you could see that the majority of the sector, okay, just by color coding, just quick math, you got 3 green and the balance red. So you have more red than green. So you can see that this sector is more in a sell mode, as you can see, or a downtrend. So define a downtrend. A downtrend is when the market makes lower highs, lower lows, closed less than open, closed closer to the low, and closed below past or prior lows. There's a red dot. The market went into a sell mode at Macy's. It came close to its monthly pivot resistance, generated a sell signal, and the market's been in a downtrend. So hopefully that does describe adequately anyone's definition of a sell signal and a downtrend. There's the sell signal, that fuchsia dot, and the market's been in a downtrend for the last 1, 2, 3, 4, 5, 6, 7 days. 1, 2, 3, 4, 5, 6, 7 days. Downtrend. All right? The downtrend's also been associated with a little bit of volume, and we're going to get to this indicator in just a moment. But I just wanted to make sure that you understood what the criteria was set up that defines, and this is key, what defines a bull and a bear signal, all right? Or a downtrend, a bullish reversal, or bearish reversal, okay? What is the trend? So if we take a look at this, it's very simple. It's an easy way to put up on a radar screen or your map section what the sector's doing. So let's take an overall view of the market right now and say, what does, as of Friday's close, what does the top sectors and the top stocks in those sectors look like according to John Persons indicators? And as you can see, home builder sector. Now this is not Toll Brothers and Lennar, et cetera, et cetera. This is the XHB Home Builders ETF. All right. It generated a sell signal on Thursday, and it declined and had that lower high, lower low combination Friday. If we take a look at this home builder section, you'll notice that majority of the stocks, even Home Depot, which had been in a 3-day decline, and it might be interesting to see how this market pops out of this with expected sales in the Northeast for lumber and home repair items, et cetera, see how that pops out of this next week, or this week to be exact. But as you can see, the majority of that sector is mostly in red, okay? As we get into utilities, most of that sector is in red. And then we get into semiconductors. Lo and behold, almost the majority of the sector is in green. So ADI, Analog Devices, on Friday popped into a buy. Intel popped into a buy. IRF, LLTC, LSI, all popping into buys. So what does a buy signal mean? It means that the market generated a buy signal on Thursday, and Thursday night we did our presentation, and there was follow-through on Friday. And some of the stocks, in fact, if you take a look at LLTC, on Friday, some stocks went into a buy on Wednesday in that sector, some on Thursday, and then a remainder balance of the stocks generated buy signals on Friday, the day after or the next morning that we did our presentation Thursday night. So what I told you on Thursday is I wanted to follow up with you this week and to say, okay, think of the logic here. If a sector is supposed to be bullish, then I want to see more than one company name in that sector come to life. How would I see that company come to life? I want to see buy signals, number one. Number two, when it does pop into a buy signal, I want to see an accumulation of an increase in price accompanied by an increase in volume. And that's one of the things that we see with the on-balance volume indicator. As prices have seen a small or mild recovery, especially in LLTC, we noticed Linear Technologies, notice that as prices made newer lows in here over the last few days last week, made newer lows in price, it didn't do so. So on this day right here was the absolute low. Then we saw a newer low. Then the market closed down, and this close was below that close. But where was the volume? The volume was higher. So we have lower closing prices. You have higher volume prices, or higher volume measures, excuse me. Bad nomenclature on my part. Higher volume readings. So that means the sell-off on Wednesday, last Wednesday, was not on strong volume. Then on Thursday, the market closed up, and we saw the on-balance volume indicator break out to newer levels. And then on Friday, finally, it pops into a buy signal. So one of the things that in my analysis, when I create this form of indicator, when we take a look at, and something we had discussed earlier was advanced decline. So when we take a look at the New York NASDAQ Composite Index, all right, we see, and what this represents, this is an advanced decline based on a comparative ratio up or down pricing. So on a down day, we see what the rolling rate of stocks going down versus up advances when the market moves higher. So theory is if a price of an index goes up, we want to see that index go up with the majority of the stocks moving in line with or in association with an increase in the price of the index, because many of the indexes are capitalized weighted. They give more weight to a few companies. If Apple is the highest weight and IBM and a few other names are the highest weight and just those companies move up, it's going to drag the index values up, but you're not going to see the majority of stocks within that index move in association with the value of the index. Hopefully that makes sense to everybody. So what we'd like to look at is an individual advanced decline on each individual sector. So with the NASDAQ in its decline mode, and we've seen a market that broke back down into its July highs, and that's what the NASDAQ Composite Index has done. But the interesting part is that we're not breaking. Testing, 1, 2, 3. Are we back? Can everyone hear me okay? All right, very good. All right, so what I have to do is we just had a power surge or a power outage. I'm not sure what that was all about on a clear sunny day here in South Florida. But unfortunately, if everyone can just stay with me right now, what I have to do is log out and log back in. So just give me a moment and we'll be right back. In fact, I think all I have to do is reproject, get the new connection going. All right, we are back. All right, now I'm going to need a double Y to make sure I'm back. Comp chart, thanks, Steve, appreciate it. All right, so in any event, We're going to want to see if, to me, from a technical basis, this old low level area is holding on a higher degree time frame, weekly basis. I get bullish on confirmation when we get closes above this consolidation at level one more time. So until the comp levels, do two things. Number one, and this is why we're going to be together for this week and into next week. We want to see if we see an AD line improve, number one, in this sector, okay? And number two, we want to see if prices give us a, if the market's going to turn bullish, we want to see bearish conditions cease to exist. So bearish conditions are what? Lower highs, lower low, more red candles and green candles, which signify closes less than open. We want to see markets close greater than open. We want to see the market close above past or prior highs. We want to see bullish formations, and we want to see it with a third element, not just when we look at an index. We want to see the third by examining the advanced decline of the index. We also want to see that move accompanied with an increase in volume. So that's one of the things that we want to kind of get moving. So when we take a look at the semi space, like I'm sharing with you, even though it's a seasonal trend to go up, we want to make sure some of those factors are with us. Do we have a buy mode? Is the market in a buy mode? And if we are in a buy mode, is that sector starting, are we seeing individual stocks starting to be accumulated? I think this was one of the most hated companies for a little while here. This is Intel, and I think at the bottom left, I'm not going to put up a daily chart. I'll just show you this. This is a weekly chart. So for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks, all right, 2.5 months, Intel has just been absolutely killing people. They hate this company. This is probably one of the most hated chip makers right now. No one understands why this company has just gone as bad as it has. However, on a little minor uptick last week, we did see an associated move in volume. 1 week does not halt a decline in a trend. But when we take a look at Intel moving up, when we take a look at all the other stocks in that space moving up, it heightens our attention. The reason I bring this up is because on Thursday night, we didn't have, everything wasn't green in that sector. If you recall, I think we have this recorded. You can go back and look. Because on Friday, 1, 2, 3, 4, 5, including the index itself, finally popped into a buy on Friday. So it's kind of like the whole sector was complete of people covering shorts or maybe buying in the market, and we did see an accumulation of movement coming into that space. So for me, when I look at a commodity or a sector or a stock looking as if it's starting to become bullish, you know, we go through phases where you go through a strong trend and then a consolidation, and you're either going to resume the trend down or reverse the trend. Knowing that the seasonality of this space is to go up in this time of year, all right, to go up in this time of year, we're paying closer attention with a microscope at the underlying stocks within that sector. So that's what we talked about. Gold as well. Gold starts to bottom in the bottoming process. So we bought some bear put spreads in GLD. We've covered those. And I'm looking to see how the market responds near 1700 to 1675 area. And quite frankly, it's not going anywhere. If you notice that it's just kind of hovering here. Of course, it hasn't had a lot of time to trade, but it is still just hovering above that 1700 level. So the markets in the S&Ps are open for the next few minutes, and I'm not sure if anyone is interested in trading in the market in this next few minutes. But one of the things that we want to focus in on seasonality is, I would say, because this year we have 2 days, we're going to see a shift to the right of the seasonal trend this year because of the fact that we've turned a 2-day weekend into a 4-day holiday, or a 4-day weekend, right? So the month tomorrow is going to be very important, and I think we're just going to be cramming a lot of 48 hours worth of work in 8 hours. Excuse me, what is that going to be? 72 hours worth of work in 8 hours. So it's going to be a very interesting, tiring day tomorrow. So we'll have our sleeves rolled up, and we'll be here in full force tomorrow as well. But in the meantime, gold, I just wanted to remind everybody what that seasonal trend, it kind of bottoms out a little bit, and then December kind of bases out. But from December going into the end of February, middle February or so, the end of February, gold has one more surge to the upside. So I think at this time frame, if gold is going to remain in a seasonally strong period of time, it should respect, now that we've gone through time and price, we should start to see some indications, and perhaps look at the entire metal complex, whether it be platinum, silver, gold as well, see if there's investment demand coming into the marketplace. Last but not least, I did want to discuss this, was the bank sector bottoms early. Banks, especially if you notice the theory that we talked, not the theory, but the seasonal aspect of the marketplace, mainly looking at the seasonal aspect of the small caps. Small caps tend to outperform large cap. And this is where this might be interesting, is the regional bank index. Typically, the regional bank index begins to bottom out in mid to late November. And then we see a strong move that goes into, as you can see in this chart, February. So that would be not a 30-day short-term trade, but maybe a 90-day trade. And I bring these time frames up to you because seasonal analysis, I think, is one of the most underrated trading tools for options traders. Many people get into options. 80% of them expire worthless because they don't look at the timing, or they spend put too much credibility that that trade can't lose. And I think you have to look at it that every year's created not equally but yet different, but yet there are some years where you see a sector perform and some years where you see a sector outperform its typical norm market movement. Yesterday, we came up with an idea in our, I'll change this to, hopefully you can see this in a note page, in our planning and scanning, is that we're going to be looking this week at 90-day or more bull option strategies in Schwab. And one of the reasons I bring this is what we discussed yesterday in planning and scanning, is because not just the bank sectors, but also broker-dealers. Broker-dealers, if the stock market increases in volume, revenues increase, traders trade more, therefore broker-dealer sector as well as regional banks, this whole space starts to improve. So therefore, we want to be looking as well as the XRT. We don't look to be a buyer of that until closer towards the middle or right before Thanksgiving. We have a very strong seasonality of the retail space the day before Thanksgiving, Black Friday, and Cyber Monday. So we might see some little move here, but I'm not interested in even looking at this space until maybe the middle or the last week. And if you come out to our two-day seminar here in December, we'll see how that works. We're having a little bit of a really great event, cocktail reception on a Saturday night, training on Saturday, trading on Monday. Great event in December. And before that, we'll be at the the Las Vegas Traders Expo. And so we're going to talk probably more retail ETFs. In the retail space, there's, if you think about a stock in the theory about getting beaten up beyond belief, okay? When we take a look at a company name that just absolutely has gotten its butt kicked, right? Absolutely gotten its butt kicked, is BIN. Short this stock, I would want to sell out, or if I was long this stock and I had a loser coming towards the end of a fiscal year or coming towards the end of the quarter, I would want to sell this thing and take the tax loss. That's why and I've been talking to our community about a buying opportunity eventually in this, because the old adage, buy it when nobody wants it, sell it when everyone's got to have it. I have not placed a long position yet. I'm looking for the selling to exhaust itself. But if you notice, look at the way the market has sold off, and all of a sudden we see this decline on bad news. It's almost as if it has been just absolutely pitched. So everyone is kind of like, now that you've kind of broken out of this sideways range to decline, it's just breaking down significantly. And I think Best Buy might be like Sears was last year. It could see quite a reversal in the marketplace. But now's not the time. But I do have my eyes on this. The cheaper it goes, I don't think they're ready to file bankruptcy in that type of situation. But I would be looking, and I am eyeing Best Buy. I think they're going to come out of this season fairly strong. That's my call. So I'm not in it yet. I'm looking for signs of life. I want to see stabilization, look for a buy signal, and I'm thinking that this stock could have a very a short-term move due to the seasonal holiday spurt between, say, mid-November and late January. So in that time period, I'm looking for a reversal in this stock or this particular space. And interestingly enough, on Friday, when the market closed, we had all these company names, just so we don't have to go through them, but 29 companies generated daily buy signals, all right? And these aren't just wimpy buy signals. These are kind of like a daily buy signal when the weekly, like Adobe. Weekly's been in a buy mode, and it generated a daily buy signal. It's been in a daily buy signal, as you can see, Adobe. So the scan that you can see here was done. Give me a listing of all the stocks in the S&P 500 that were in a daily buy, that were also corresponding in a weekly buy mode. As you can see, 29 names popped up. Now, when we said the opposite, and as you can see, it's popped up on our mode, so I'm telling you, what it is. The daily sell signal when a weekly's in a sell mode. So when we take a look at that, we only came up with 5 names. 5 company names generated a sell signal on a daily basis while it's been in a weekly sell mode. So when we take a look at the amount or the quantity of sell signals versus buy signals, Friday was not that damaging. At the end of Friday, we didn't get a whole list of new sell signals. It didn't outweigh the buy signals. So therefore, it was sharing to me that the market's probably coming to an impasse of some type of support. So that's one of the things that we are looking at. Now that the market is, with these long shadows coming in here, we saw this green line, which is the support, and as you see, the S&Ps coming into their close had a nice little surge to the upside. Longer term, it's going to be important to see how this market closes on a daily basis and at the end of the month. We're going to be taking a look at not just the weekly chart aspect of the market. We also want to take a look at a monthly chart. So tomorrow when we get in here, we're going to take a look at monthly. At the end of the day for Thursday morning, we'll take a look at how the monthly chart analysis looks. Now, let's take a futuristic look, all right? First off, so let's discuss the indicators that we use. First off, the blue dot, the stock market's been in a buy signal since the end of June. So, or excuse me, the end of July, the July month. So the market went into a buy mode, and the moving averages, the person's indicator, as you can tell, the market's made what? Higher highs, higher lows. The market last month closed above past or prior highs. So we did get a breakout. To me, let's take a quick look together. The high was 1417.5. If you have not 1 month, but I don't know how a market's going to perform tomorrow. I'm just not that good. But if we get a close above 1418, let's say, let's call it 1417.50. If you get a close above that level, then you now have 2 months of closing above past or prior highs. Not bearish in my mind, number one. Number two, we also have established, even though we made a lower high, we've made a higher low. The market's in an inside range for the month, but it's still maintained at least good value. More importantly, look at the monthly moving average. Look what the market did. It snapped back to a monthly moving average, and if the market's to remain bullish more on a longer-term basis, we would like to see not just the lows maintain above both moving averages. We want the entire range is above both moving averages. So on a monthly basis right now, just anticipating ahead, the market does not look as disastrous as what many people might feel is out there. So we have some seasonal analysis that shares with us that we could see some upside. Our technical indicators, as revealed, that I use with looking at on-balance volume, when we take a look at the S&Ps, all right, on a weekly basis, yes, they've pulled back. And you know what? Everyone, as the market was moving up, was asking, when is this market going to pull back? Longer-term trends are still intact. I've got my eye on how this market closes and how the stocks perform. After all, in the S&P 500, looking at the advanced decline ratio just as it relates to the S&P 500, actually broke out to newer highs. So price made newer highs, and it did so with a breakout on accumulation of more stocks within the S&P 500. So this is not a very bearish longer-term event. So when we take a look at the futures, and so let's go back to the futures here. When we take a look at this weekly chart of the S&Ps, my next favorite tool, of course, is on balance volume. If we take a look at this market, and I think if you also look at one more indicator we're going to go back to, and that's part of today's presentation. Today's part is how do we measure and quantify our seasonal trade ideas. And first thing is you got to look at the overall market, the health of the sector, and what you're looking at on an individual stock basis. The next thing we like to look at is what's the participation or the volume level of the market. And as you can see in here, this is the overall S&P 500, and this is a weekly chart. So let's take a look at the volume levels. So follow this with me. Would you agree that when we generated a weekly sell signal, we had this engulfing pattern, then the following week we made a higher high, lower low, and then formed a doji. So at that point in time, it really took a lot of traders, and it actually that sell-off, which occurred on Friday, option expiration, took a lot of people by surprise, all right? Now, the market pulled back to its pivot support. We made lower highs and lower lows. Agreed? Do we have lower highs, lower lows? Sure. I mean, it's pretty much prevalent right there. But if the market was going to melt down and get sold off, and according to several contrarian or consensus indicators, the AAII, you look at different newsletter writers. I mean, a lot of people are very bearish on the market right now. The funny thing is that this decline was not on heavy volume. In fact, prices made lower lows, but volume levels on a weekly basis did not make lower lows. So I don't know about you, but are you curious about why that sell-off was not on heavy volume? Is anyone curious on that? Does it raise suspicion about the health of the overall market going down on light volume? That's a warning flag, correct? Now, does it mean let's get in there and buy with all fingers? Does it mean let's sell everything we own? No, we need more evidence, more information. It's not the most, it hasn't been a very kind market because a lot of the fundamentals do not match, and I think that's what a lot of people have struggled with. The news and the reports do not match what the market's doing. But there's a lot of buying going on in the market. We see that with a lot of stocks that had participated in the overall rally, and we see that by the advanced decline comparative ratio analysis, not just on the NYSE, but on all the top sectors in the market. In addition, we're looking at volume studies. My favorite study is on balance volume. It's not the volume study that we look at. It's not the volume study that many people may look at per se. When you take a look at different, and I'm going to bring this into light for you. A lot of people have said when they look at individual volume bars, they say the market has rallied on declining volume. And let me bring this chart in line for us, if I could. Here we go. All right, so if we take a look at this little sampling of this chart, right? Gold, for example, back in July and August, gold had a nice little breakout. But if you were just following volume bars, you would have noticed that the volume bars were declining as prices were rallying. And then finally, if you take a look at the on-balance volume, as prices were making from this low, from that high to this low, to that high to this low, we were making a higher high, higher low combination. So when the market did not take out that high, it didn't take out that low. We still had higher high, higher low. This chart at the bottom is your seasonal trend. Typically, it shows that gold tends to bottom towards the middle to the end of July. But if you were following this graph in volume, you were probably confused by saying the rally is not sustainable, gold's not going anywhere because the rally is on light volume. And you hear that a lot by technicians in recent years. They look at individual volume, and I'm here to tell you and explain to you. Back 100 years ago, I'm exaggerating, back 20 years ago, 10 years ago, 15 years ago, ETFs were not in existence. You no longer need to trade gold. I myself, and I'm thinking our broker here in commodity is going to cringe when I say this, it is damn near impossible to trade a commodity option strategy. You cannot get a fair price on a bull spread on commodity options. It's just darn near impossible. However, I can get off within one click and a tight bid and ask an option strategy on an ETF called GLD that mirrors the price direction or price movement of gold. So the question begs, will volume show up in gold? Instead of me trading gold, I might be able to trade gold from an option strategy. I might be able to trade gold as an ETF. I might be able to trade a synthetic long via the option strategy, and the volume is not going to show up on the individual market, is it? So therefore, I think it's a better way to measure the price direction if it's accompanied by volume is by using the on-balance volume indicator, which measures if the market goes up, is the volume on that up day outpacing when the market goes down. If the market goes down and the volume is lighter on the down days than it was on the up days, guess what? You're going to have a stronger reading and a more truthful reading of the health of the market rally or trend decline. Hopefully that made sense to you, because truthfully, we see this type of example time and time and time again, where trend moves up, but it's on weak volume, but on balance volume shows the true trend direction or health of the volume accumulated. In the XLE Spider, for example, same thing, market is in a person's, this little triangle is a buy signal, the market rallies. We see that rally accompanied by a breakout of on-balance volume. So as the energy sector was moving up, guess what? It was moving up on an increase in volume. But on volume bars, it was moving down. Therefore, no one really believed it. Seasonally speaking, the market actually has a trend that moves up from, say, late July into mid-September. And that's exactly what we did see. So from a seasonal aspect, if you can measure, okay, I have a shopping list, and typically this is what can happen in the market or has happened in the past. For whatever reason, this is what happens in the past. Now, is this year going to be the same kind of move? Is this going to be the same type of trend? Because the move will probably never be the same. It'll either be magnified or muted, meaning you're going to see bigger advances or not as big of an advance as the prior year. That's what we call a muted or magnified effect. It depends on each individual year, but I can quantify the health of that move by looking at the on-balance volume indicator. So today's session was about what are the indicators that I use to quantify looking at a seasonal trend or a seasonal trade. If the S&Ps traditionally bottom out and going, if we see sectors within the S&Ps do better than other spaces. So right now, I doubt that you're going to hear about semis until that market makes an appreciable increase. And so what we try to do is look for seasonal trends in the market and then identify those trends by seeing if there is confirmation by the stocks within that sector moving in accordance to its seasonal trend. And in addition, if that is the case, is it happening with an appreciable rise in trading volumes? So that, my friends, is how we can look at measuring a move. Now, we use pivot analysis, the person's pivots, to help us uncover hidden support and resistance. And as you can see, we've been trading, and as the market's anticipating the month of November, we are actually formulating, as you can see, a lower high, lower low right now, because Wednesday, tomorrow, is the close of the market. So tomorrow is going to be a really important day to see if the close, based on tomorrow's action, how the market's formulating a move. Even if we stay in a bearish trend, in other words, the projection of the market, the lows aren't that dramatic and the highs aren't that dramatic. In other words, they didn't really depreciate from the prior month's lows, and they didn't depreciate from the prior month's highs projected levels. I mean, even if we only get a move back up to 1450 in the month of November, and if you take that out, the next resistance, or at least the predicted level, is 1494. I think that would be a very, very big surprise for people. So TradeStation thinks, because this is an automated system, TradeStation thinks that the market is now open for business. I think we all know the market's now closed. So with that said, that does conclude our session on what we wanted to cover both last week, looking at a review of what this sector looks like, the components, how we measure these sectors by quantitative analysis using certain tools. And that was what part 2 was supposed to be. This was the part 1. We take a look at these different stocks in this sector to see if they perform. Apple. This is kind of interesting because my target level was around 585. And when Apple came out that night, 587.60 was about our average. There was a gap down here. It was near these old highs. And this is the exact chart that we put up, as you can see, from October 22nd. This was our target. It was also shoulder, head, shoulder, neckline. That was the measured objective for Apple to get down. I tweeted that it hit 585.10 on the night session in the after hours. And one of the interesting things is that Apple, in this internet, the IIX, typically sees a market bottom and then rallies going into the rest of the year. Apple came out. Of course, it got beaten up in the final minutes. They halted trading. It hit the objective, and it completely reversed. So actually, I tweeted that Apple was untradeable. It might get down there, but it was untradeable. So it never got down to a tradable level that was realistic. So this is the pivot, support, and resistance for Apple. So on the for some professionals, they may have been able to take advantage of it, and I think that maybe there's some actual, I don't know if you want to call it, anyone that bought up in here is definitely going to take a tax loss selling credit right down in here. But I think if we get a daily buy signal, the odds of seeing Apple come back to test this level between 650, 675 are high. So the fact that it came to it, it met its head and shoulders objective, number 1. It filled a gap in the charts, number 2, on the overnight session, which does not show up on our TradeStation charts. Number 3, I think the space that is now in a bullish mode, we can start to confirm by looking for buy signals. So in any event, we did give an offer last Thursday night. That offer will be extended because of the situation that's going on. And again, we're going to also include an extension for our a lot of the stocks. Someone had asked me a question yesterday. The answer is most companies, except for Ford today, are postponing their earnings. I'm getting the information as fast as you are as well, and we rely on our community and our friends and our customers and clients to to give feedback about this situation and earnings, etc. As far as the last report, the monthly jobs report, the Bureau is looking to get that information out on Friday. So again, rest up, my friends, because we're going to have an interesting 3 days. We've got a lot to look at. I hope you stay with us. We'll share our information with you to help you get through this, at least quandary of market conditions by using the tools that we've not only developed from a personal standpoint with the person's pivot indicator and the PPS, but as well as the other indicators that we use that we've shared with you in the last few days. So do stick around. We've got some more earnings coming out this week. And again, as we have announced, we will have an open house. So we're going to extend this not just through this week, but then through the middle of next week. So you're welcome to stay with our community and to come into the trading room. It's the same login, the same process that you have. And with that said, I thank you all for being here, and keep in mind what we have to offer. So again, for those that are going to be joining us in December at our 2-day live event, we look forward to having you here in Florida. I think hurricane season will have passed, so we'll take a look at other venues. If you're coming out to Las Vegas in November, we look forward to seeing you. And I myself, friends, am supposedly going to New York to a Bloomberg conference. And Bloomberg, as of yesterday, did not cancel the conference. I'm not sure I can fly into LaGuardia, though. So we will be taking an interesting look at whether or not, A, New York City has power to do these conferences, B, the capacity for airplanes to fly in that area by Thursday. That'll be a testimony to American ingenuity and resolve to clean up the wreckage of Mother Nature. With that said, everyone, thank you so much for being here. And again, the markets are closed. We will have, I believe, there was extended sessions for the currencies, and ICE was open if anyone was interested in trading the coffee, cocoa, cottons, and that type of stuff. So, but as far as the equity markets, we are closed there. I look forward to seeing you guys back in the room tomorrow with our resident trading partner, Butch Heading. So Butch will be using if you're not familiar with how we use our indicators or how to use them appropriately and how we use them, stick around tomorrow for an interesting session. I will be here as well. So we will follow up on the stock sector seasonality plays, and we'll see if, in fact, I do want to, before leaving you, go over here to a stock. We did remember I had mentioned broker dealers, and I used Schwab as an example. Interesting that, this company, TD Ameritrade, which actually owns Thinkorswim. Well, Schwab was always a favorite because Schwab was, it represented a lot of public interest accounts, right? And then E-Trade came around, and all of a sudden that space. But TD Ameritrade beat on their earnings and their revenue. Notice that on Friday, they actually generated a daily buy signal, a high close doji, in fact. So one of the things that we kind of like to look for are, if the market does get a bid in the market, is it accompanied, is the base of this price action, what looks healthier, this rounding bottom in the volume or the price action in of itself? I think if you're looking at price, you want to see if there's volume accumulating into a company. And so in essence, we had several bullish patterns. Seasonally, this space goes up. And again, that's one of the areas that we will be discussing this week and next week. We do not have a generated weekly buy signal yet, but the funny thing is, look at the volume on a weekly basis. Volume broke out, price didn't move. So someone was actually accumulating stock down at that level before the news. Now, how could you have known that? Seasonally speaking, I mentioned to you the other day broker-dealer. The broker-dealer, the banking sector bottoms out. We typically see moves as we start to see rises in volumes in the stock market. Brokerage firms do well. This company, though, many of you might have accounts with Thinkorswim, is excelling in the option trading arena. So they're getting the best of both worlds. And if volumes pick up and more traders are beginning to trade, this company will have a nice move to the upside. And so I'm not sure where we're going to open this company per se on tomorrow, but this is a weekly chart, and I'm going to go to a monthly chart with you and just say, gee, it actually hasn't gone anywhere. It kind of looks like the long-term history of Walmart, which, by the way, Walmart finally did break. You know, many of you know Walmart did break out. But one of the things that I think is kind of neat is that we're seeing, if we start to see this sector move, what we want to do is look at what's the strongest stock within this sector or the best bang for our buck in this marketplace. And that's one of the things we're going to examine this week. So we've got some at least some areas of interest from a standpoint of what sectors to look at and also what stocks within those sectors. So anyway, I hope you found this at least good information. I will give you one more item on the Treasury bonds. Looking at Treasury bonds from a seasonal perspective towards the end of November, it's actually, I'm going to cheat. That's right, I'm going to cheat. You know, I'm going to turn to my own book, Commodity Traders Almanac, on page 98. I'm going to read this to you, okay? Treasury bond prices tend to decline in late November. We have a seasonal short play selling the June futures contract because we actually had to take data from a June contract rather than a rolling continuous contract to find out what the actual statistics, the numbers were. And that was what we brought, that I came to the table in improving this product years ago. June futures contract on or about November 20th. This year, it might come earlier if this stock market bases out, if we're perceived to see a new leg to the upside, if the stock market is going to go through a new era of a new expansion of value, then finally we're going to see people not want to be in Treasury bonds. Remember, the markets move ahead of the actual events. They anticipate. So while the economy doesn't, you know, Ben Bernanke's still in the quantitative easing mode through 2015, people might start to liquidate bonds, but from a seasonal perspective, bond prices peak out on or about, and the key word there is about, November 20th. So in the next few weeks, we want to be looking at shorting bonds, not for a day trade, not for a monthly trade, but at least going in for the next 150 days, okay, going into April. From November to April is the weakest time of the year to own bonds. This year might be because everyone's looking at when bond prices are going to finally peak out. After this big rally that we've seen, people have given up on trying to trade bonds from the short side. And I have a feeling that this year we see changes going on in the marketplaces. These hammer formation, these doji formations at the top, the person's pivot study generated a sell signal at 147.5. Now, I don't know if the market's going to crash to 147.5 this month, but work with me here, folks. If you thought the stock market was going to go down and you looked at bond prices on the surface on a daily chart, you'd say, gee, they're going up. Bond prices aren't going down. But when we take a look at this volume study together, now let me examine that closely. From this low to that low, price lows are substantially higher, but volume levels are substantially lower. That means there's very few people interested in buying bonds up here. This is quite a keen observation because in that type of analysis, we've never seen when prices made lows, they made higher lows in volume. When the market made higher lows, we've never seen lower lows in volumes. That's the first time. So when you tell me or ask me when do you see bonds peaking out? I see bonds have been peaking out for a while now. A hanging man, a doji formation. This has been a kind of a ominous time frame for the last 60, 90 days. So most people forget about bonds. They get complacent about a market. They forget about it. And I think now, because of this study right there, higher lows on lower volume, higher prices on lower volume, that might spell disaster. So looking at bonds from a longer term perspective using a monthly chart is giving us kind of like an idea that perhaps this thing has run its course, or perhaps it's due for a seasonal decline. And since we do have entering a seasonal decline, this year's decline, or if we do see a market that does go down, it might be a little bit more magnified than it was last year in 2010, and then as it was in 2011. So that concludes our time together. Thank you all for being here. And again, please log in tomorrow. Same bat channel, same everything, and that might just help you all at least see what we're seeing over here. So thanks again, everybody. And we do not have these we do not have these webinars every day, number one.